Hello and good morning, listeners. Welcome back to Almus Market Mornings with Jairam Krishnamurthy, your morning brew of global financial updates. And folks, for the last few days or weeks, we've had quite an interesting set of events. The India-Pakistan conflict saw the ceasefire, which led to INR opening stronger, only to weaken later by the close. Indian as well as the US inflation was out yesterday, with softer numbers by both the nations. Interestingly, after this release, we again saw President Trump raising pressure, stating inflation and energy prices are low and the Fed must cut rates. Jay, glad to have you back. But what are your thoughts on this recent set of developments?
Good morning, Shikhar. Yes, it's good to see at least the um, attacks and counterattacks have subsided, and we're not seeing much of a military actions. But there's no room for complacency, as our Prime Minister indicated. It's just a pause, and we'll be alert for any sort of actions from the terrorist side, and India will be ready to counter it. So I have to repeat the same thing, that we are in a new normal compared to what was before April 22nd attack, and India remains vigilant for any actions from the Pakistan side. And to protect itself from any sort of misadventures. Yes, the positive developments over the weekend, both the geopolitics and US-China trade talks, rupees did strengthen, opened after a gap of 3 days, because Monday was a holiday. Although stock market was open on Monday and fully expressed the positive sentiment. Rupee opened with a big gap, which was expected. But then what was not expected was an equally good bounce, and to close at the level at which it had closed on Friday. And this was led by, not just a sentiment, but also real flows, where importers were strongly buying. One state-run bank was heard to be buying consistently, and this is presumably for some defense payments. And at the same time, market also presumes that looks at the current situation as not completely settled. Therefore, whenever you see a dip in the USD, there is interest to hedge themselves in view of the uncertainties that have not gone away. At the same time, a quick uptick to around 85.50 also invited actions from exporters who had been left out earlier due to gap down, and even earlier also, fleeting moments only we had seen higher levels, and exporters could not act. So yesterday they were in action as well. So broadly, it looks like the rupee will settle in 84 half, 85 half range for some days before we see some fresh developments, or a more sobering developments, which can see eventually rupee to strengthen, which is what my feeling is, that eventually it is going to strengthen on a basis of overall dollar weakness. Yes, inflation easing again for the sixth month in a row at 3.16%. I think strengthens the hand of RBI to further action on monetary policy, supporting growth. Good thing is that food inflation has remained subdued, and expectation that it will remain subdued for some time, as we have a good rabi crop expected. Monsoon is expected to be lower, and comfortable reservoir levels, which all augur well. Conditions are in place for inflation to remain well within RBI's target, and they can focus on growth, of course. And talking of inflation, as you mentioned, USCPI also showed the inflation coming lower than expected. Headline as well as the core coming lower. In fact, the headline year-on-year inflation was lower than last month as well. And these are due to some of the items like airfares, and then housing-related inflation, used car prices, all of them dropping. And we also know that the gasoline prices have also dropped substantially, with the international crude prices dropping. And no doubt, it gives a chance for rethink on the side of Fed, particularly in the context of the tariffs now getting moderated. with the trade talks. For example, we know UK-US trade talks concluded positively with only 10% tariff being imposed, and US-China also reduced their tariff much lower, and going forward where it will settle is something that we will observe, but the worst has been seen perhaps, and could give some scope for Fed to see whether they can focus on the employment and growth. We know that these higher tariffs by China and US will have a pause for 90 days once again. So whatever the input the companies import during these 90 days will be not subject to the higher tariff, which means inflation will take time to reflect itself. Higher inflation will take time to reflect itself. But surprisingly, that is not borne out by the Fed Watch tool, which now indicates only two cuts this year, September and December, perhaps falling by 0.5% to 4%. And at the same time, some of the investment bankers have also, reduced the chances of U.S. recession this year from 45% to 35%, which is a good news. So perhaps lower inflation and lower chances of recession gives a big boost to the overall sentiment. Yes, you can't keep Trump away from anything. The moment you have a lower inflation number, he's there on the line, criticizing the Fed for not acting even as the prices are lower. Yes, of course, central bank has its own objective way of approaching, and so we'll have a chance to hear Powell tonight. He's speaking at an event where we could see some fresh statements from him in view of the latest developments, or whether he keeps to the same tone. This is what the market would be looking for. But despite all this, what we've seen is a jump in the long-term yields in the US, both the 10-year and 30-year. Now, 10-year moving towards 4.5, and 30-year towards 5%. Both are considered to be key levels for the market, and any sustained breakthrough these levels can once again bring in the specter of the bond market upheaval. Yes, because this is a key area of economy for the government, which is still struggling to find ways of balancing its deficit, and also addressing the huge debt that is coming up for renewal this year. So this is one area I'll keep an eye on. Although the risk assets are have done very well right from the time 90-day pause was announced on April 9th, and further getting some impetus after US-China getting into talks, and Trump himself saying that he will directly be in touch with Xi. So those are the good developments in the global market. Of course, we'll have further indications on PPI, from US. That will again give some indications whether the overall inflation is now getting back to the closer to the target of US. On the dollar, again, as I mentioned yesterday, the dollar's strength was always going to be a correction, and underlying um, direction for the dollar is, of course, down, not just because of any relief from tariff or higher tariff. It's all because the structural position of the dollar, and the amount of assets, US assets, that the fund managers are owning, which they are looking to diversify into other economies like China and Europe. And of course, gold is not right now getting that preference because it's already overbought and still undergoing some correction. But definitely, Europe and China are attracting money, particularly Europe, because even yesterday's data from Europe on the economic sentiment was a good jump. And yes, we are seeing a steady jump in the economic indicators in Europe, drawing investors into those. So euro has already jumped towards 1.12 after testing 1.1050 in the last few days. So that is one currency that is leading the dollar's direction. and other currencies are, also taking cues from their own respective economic fundamentals, like Australian dollar, with a good set of employment numbers also, doing very well. I think we are in a situation where we have had big moves on the dollar on the downside, and we had a good correction. Now we await a trigger for next move, but remember that our core view is that dollar is likely to be down over the period of next several months. Yeah, thank you.
Okay, JK, that was really good. And yes, folks, as JK mentioned, the core view remains that there can be some sort of weakness in the dollar that we can observe over a period of time, primarily on a few of the backdrops, as JK mentioned, about diversification of the investments as well as the rollover of the significant amount of debt coming in the shorter term tenor. But on the other side, on the macro front, we've seen the US headline as well as the core inflation coming lower, which has now pushed on the rethinking side for the Fed, as the tariffs are also moderating from the higher levels, and the inflation is also on the lower side, along with the pressure from the President Trump. The question will be, how do things percolate, and what do we hear from Fed Chair Powell today? On the domestic front, we've seen the uh, inflation on the easier side, which can bring in comfort for the central bank and its policy and its focus towards growth. But having said that, we are still in a new normal, and vigilance and readiness is there as one of the characteristics which the Indian government has stated, that we'll be responding to any of the misadventures with such reprimand. On the markets front, the flows were consistent, and we've seen the importers taking charge yesterday, purchasing dollars to cover their payments, leading to USD INR moving higher, but eventually some sort of action by the exporters was also observed, keeping the currency pair in a range, and that should be the case for the week. So that's it for today, folks. We shall come back again tomorrow with another round of updates. Thank you so much for listening in.